Welcome to Globewatch 2020. I am Charles Ebune at the Hilton Hotel here in Yaoundé. It was created roughly 26 years ago to serve as a financial facilitator to the development of the continent. I'm talking about the African Import-Export Bank, which has been existing for years now and decades to help African economies integrate better. In an ever-changing economic environment marked by the creation of the African Continental Free Trade Area, what could be the place and role of this African Development Bank created auspices African institution? My guest today on Globewatch is the chairman of the Africa Export-Import Bank, Professor Benedict Okey Oramah. The chairman of the Africa Export-Import Bank, Benedict Okey Oramah. Welcome to Globewatch.
Thank you very much, Charles.
Let's start with one of your latest outreach missions, and that has been in Russia for the first ever Russia-Africa Summit, because you are one of the major organizers of that event. Roughly 35 official events took place. What was this summit to the development of Africa, especially the private sector? About 20 billion CFA francs, $20 billion of debts were written off by Russia.
Yes, thank you very much. The goal of the African Export-Import Bank, one of the key goals is to leverage international financing into Africa, to bring investment into Africa, to promote trade between Africa and the rest of the world. Today we are focused on promoting intra-African trade. But to promote intra-African trade, we need investments in capital goods, infrastructure, to create productive capacity for export manufacturing, logistics, and so on. The need for this kind of infrastructure is so huge. Estimates are about $100 billion per annum and above over 10 years. That's more than $1 trillion. That is more than 60% of the total budget of the whole African countries put together. So Africans cannot finance it themselves. So we need partners. And that is why we, as a Flexing Bank, are making sure we spread the tentacles around to expand the partnership Africa has. Historically, Russia had been a strong supporter of Africa, especially in the 1960s, 1950s, during the struggle for independence. But following the demise of the Soviet Union, that support waned. But of recent, thanks to the work we've been doing with the Russia Export Center, who became our shareholder, and also some of our clients who are Russian entities, we've been able to begin the process of reviving this effort. Another important thing you should note is that in recent years there has been a big pushback to multilateralism. Many big economies are talking more about entering bilateral relationship for trade. You've seen the trade war between the US and China. And you know is that it's the globalization that helped China to be where they are today. So as Africa begins to push export manufacturing and the globalization is being pushed back, we need to find innovative ways of making Africa benefit from a redefined globalization. Okay. And what would that be? Having more partners all across around the world so that the markets are open for African exports.
The Russians in particular are promised to invest roughly 800 billion rubles on the continent. As the chairman of this bank, what do you think are the key areas where that investments should go to support the private sector?
In Russia, quite a lot of deals were signed. There's a memorandum of understanding, actual deals that were signed. The deals signed were in the infrastructure area, the rail, you have the petrochemical, you have the mining sector, and to some extent also the industrial sector. Those are the kinds of things we saw. And these are the areas where the Russians have expertise, and where Russian companies are increasingly getting interested in Africa.
One of your mission statement, a portion of your mission statement reads, and I quote, the Africa Export-Import Bank is charged to be like the Trade Finance Bank for Africa. Under what context was this defined in 1993, and what have you been doing over the years?
Well, the reason we were created was because there was market failure. The international commercial banks were withdrawing from African trade finance. If they were there, there wouldn't have been any need to create an
Maybe
African
I should tell
export-import
our
bank.
audience that you are part of the African Development Bank Group.
Yes, we were created under the auspices of the African Development Bank. We are not part of the African Development Bank Group,
Okay.
but we were created by the African Development Bank in partnership with African states. And because the African Development Bank played a leading role in creating the African Export-Import Bank, they have a permanent seat on the board of directors of the African Export-Import Bank. We maintain a very strong relationship. They are equity investors in the bank. They support us that, in many ways. We also collaborate with them to make sure that together we are able to deal with the challenges Africa faces, that our respective mandates.
You are talking about market failure for your raison d'etre.
Yes, the market failure caused by the exit of international banks from African trade finance. If those banks were there wouldn't have an Afrexim bank today. But because in the 1980s, following the debt crisis that occurred that time, many international banks cut credit lines to Africa. So the African ministers of finance, who were meeting under the auspices of the African Development Bank, considered the matter and thought that creating a Pan-African trade finance institution endowed with preferred creditor status in its member countries, that would begin to resolve this problem. That such an institution would present a better financing risk than individual African countries, and therefore be able to leverage international finance into Africa. And because of that, we had to have this vision. The vision of being that financial institution, being that bank that will be the go-to bank for African trade finance. When other banks are leaving, we go in, because we are created to deal with market failures. So when things are difficult, we go to help to resolve it, to make the environment better so commercial banks can return.
And possibly you have had a chunk of dealings with the African private sector and the commercial bank and investors in particular. Just how much leverage have you given to stabilize the markets for the past 26 years?
We've done quite a lot, and if I start going through them, we will not end today. But let me tell you about the most recent. In 2015, 2016, up to early 2017, the Africa faced some crisis. There was a commodity crisis. Commodity prices fell, especially oil prices. There was also terrorism-induced crisis that affected many African economies. Africa was again set to go into the kind of crisis it saw in the 1980s. So what did we do? Because international banks were withdrawing at that time because they saw high risks. Our board approved a counter-cyclical trade liquidity facility, under which we were able to disburse over $10 billion to African countries to enable them adjust in an orderly manner to the crisis. And we are very proud that this intervention helped key African economies to manage that crisis. And today, those economies, and Africa as a whole, has been able to recover smoothly from that crisis, I believe, partly because we acted promptly, acted decisively, acted with the kind of size that the problem required in terms of financing.
Absolutely. The total assets value of your bank today are roughly $12 billion. With
No,
an
but
equity,
with equity,
with an equity of roughly $3 billion.
I want to correct you.
Those are statistics from your agency.
No,
Except
maybe.
to tell me that the website is wrong.
No. What year are you talking about? You said the total assets today.
Yes.
The total assets today is about $15 billion. When you add the guarantees, about $17 billion.
Okay.
And that equity is 12 and 15 and all this.
I hope my language will not betray me. With a Fitch credit rating of stable and Moody's Baa1, tell me the support you have been giving to corporate Africa in particular.
Well, we do quite a lot of financing to the private sector, to the corporate entities. Can
you pick a country, for example, for us to be specific, because we are talking to, this is mass communication, we have to talk to the audiences and the local people.
Well, here, for example.
Anyway.
Yeah, I can talk about Cameroon. We are Cameroon.
Absolutely.
We are supporting here cocoa processors. We are supporting here financial institutions that are on lending and financing to SMEs across Cameroon. We are supporting here certain private sector entities to enable them provide the kinds of services that help the corporate entities to operate smoothly. And if you look at the whole, across Africa, it's exactly the same thing we do. Of recent, we focus so much on corporates that operate across borders, because our goal is to promote not only intra-regional trade, but also intra-regional investments. And we have been able to finance intra-regional investments in excess of $5 billion, I said, in the past 3 years or so. So the corporate entities are benefiting strongly. We actually have a program we call Intra-African Trade Champions. These Intra-African Trade Champions are African corporates that are operating across borders, who will provide a menu of services from advisory, technical assistance, financing, guarantees that will enable them work across borders.
Well, such a message should be timely for an institution like yours today, when we are talking about the African Continental Free Trade Area, to create the world's largest single commercial trading bloc of roughly 1.3 billion consumers with a yearly turnover of roughly $3 trillion. To the bank in which you are heading, how much is a blessing is this for African trade?
You see, what we tell people is that if you look at the world, the regions that are developed trade the most amongst themselves. Those that are behind do not trade amongst themselves. And that actually confirms what theory says, that intra-regional trade brings dynamic comparative advantage to economies. So for us, the AfCFTA is a dream come true. In fact, the African Export-Import Bank was created to promote regional integration. So we see ourselves as a bank that has to make the AfCFTA work. We see ourselves as the agent that will facilitate the attainment of the goals of the AfCFTA. And that is why we are responding very forcefully to it. Today, many economies are going to open their borders, remove tariffs for 90% of the products, the tariff lines. About 90% of the tariff lines, we are going to have removal of tariffs from them. That means then that many of them will suffer from revenue losses. And that will determine those who have their borders open or closed in July 2020, when trading starts. So what have we done? Working with the African Union, we put in place a $4 billion FCFT adjustment facility. That adjustment facility is to help countries adjust to the fiscal revenue losses that will happen. Second, Africa has 55 countries. Many of them have different currencies.
For the purpose of political harmony, can we talk 54? So that we don't run into troubles with Morocco for the moment. I'm talking about Polisario.
No, I'm talking about what the AU uses. You're talking about FCFTA here.
Sure.
FCFTA recognizes 55 countries. So I'm using the AU terminology, and it's on my personal. Okay. So we are an AU institution, so to say. So we use AU terminology. Okay. And the AU recognizes 55 countries.
Okay. So a while ago, you spoke about market failure, and we'll be ending in a moment. You spoke about market failure in the 1990s, and that is why your raison d'etre was found. Today, if you look carefully, the African debt is roughly $100 billion. That is an estimate from one financial think tank. It should be capital investment, they call it. When you look at African debt today, do you think that it is sustainable for the kind of African continental free trade that we have?
I want to go back to what I wanted to say, because it's important, the question you asked me earlier about the AFCFTA. I wanted to tell you that also to facilitate that, there are 55, well, whether you call it 55, 54, there are many countries in Africa, sure. Most of them using different currencies. So payment is a big issue. So we have put in place a Pan-African payment and settlement system, which we expect to start piloting early next year. That will enable people to pay for intra-regional trade in their local currencies. That will be a game changer as far as we're concerned in intra-regional trade promotion in Africa. For us, that is extremely important. And that has a connection to the debt you're talking about. Okay. First of all, if you say $100 billion debt, you mentioned GDP is about 2.5, 2.7 trillion. Well, what is the percentage? Okay. For many countries, okay, debt sustainability, then the cutoff point for some say 50%. Many countries in Europe and so on have debt to GDP ratio of more than 100%, 120%. Africa, on average, less than 50%. I'm not saying it's good, because it is ramped up rapidly in the past 2-3 years or 4 years since 2016, following the crisis. But it's not yet a crisis. Okay. Let me put it that way. And there's something that's different from the past debt situation Africa found itself. In the past, the debt was squandered. The people borrowed money, we didn't know where it went to, or it was used to buy arms, and so on and so forth. But today, most of the debt, as far as I know, went to infrastructure. Those investments will create the wealth, will create that will make it possible for repayment going forward. The issue is not just about debt, it's how you use the debt. But from a debt sustainability measure, debt to GDP ratio, many countries in Africa are still within acceptable levels.
In a moment, we'll talk your expansion policy, and we'll close the interview. But first, you are the boss of import-export banking on the continent. How much do we import and how much do we export currently? The comments you make are so authoritative.
Total trade is about 1 trillion, almost evenly divided. About between import and export, depending on the type, on the year, you have the exports exceeding slightly.
Continentally, is our trading in a deficit position or in a?
That's what I'm saying. It depends on the year, because if you look at
let's use the current.
Well, today is about in a deficit. There's a balance of trade you're talking about. But the balance of trade is not all the story.
Oh, well, in other words, you mean to tell me that African leaders today should behave like Donald Trump to say that, look, we are deficit everywhere. Let's
No. It's not all about. I just told you it's almost evenly divided. You're talking about 400 and something and 500 and something billion each. So it's not much, and it fluctuates. Okay. But for Africa, balance of trade is just one side of the coin. The current account is another side. Also, you look at all that transfers, the remittances that come to Africa, these other services, tourism, and all that come to Africa that help balance if you see a deficit in the trade account, that help balance it.
But you know, the other bad side of the story is illicit financial flows. You have read
Yes.
the late Kofi Annan report, right? You know what it talks about? Roughly about $50 billion leave the continent.
Yes.
So we are still in a difficult position.
Well, on the illicit financial flows, there are things to be done. And in that report, I think there are things that were said. We at Flexing Bank did a big conference where we had specific discussions about illicit flows. That was about 2015, if my memory serves me right. And we had very good suggestions, which we published ourselves. To continue, however, there are quite a number of things that have to happen. If that will involve governance reforms. We have to create certain mechanisms to make it easier for people to invest in Africa. We have to make it possible for people to repatriate money taken away, call it illicitly, so they can come back again. Okay. You know, all this and the so-called illicit flows also touch on multinationals. You know that those who move money through means that are meant to disguise to make it difficult for the taxman to get the money. Okay. So the money goes away. Those are actually the huge ones.
One last question. What is your expansion policy on the continent today? Because when I look at your geographical occupation of the continent, it's so limited, whereas you have a huge mandate in the transformation of the continent. Are you opening more branches across the continent?
Well, under a 5-year plan, I think with this one we're opening in Cameroon, Yaoundé. That is it for now. The 5-year plan ends in 2 years' time. Maybe after that, we may have other plans. But it's not the regional offices that determine our footprint. We operate through trade finance intermediaries. So although we are only in Egypt, Yaoundé, very soon we'll be in Yaoundé, Kampala, in Harare, and in Abidjan, in Abuja, and also very soon in Tunis. We're everywhere. We have trade finance intermediaries cutting across Africa. These are banks through which we work in those different countries. So our physical presence does not determine our footprint. It's the relationships we build through our trade finance intermediaries that determine our reach and footprint.
When you look at the African market space today, absolutely, we said it's the last question. When you look at the African market space today of roughly 12 million young people entering the job market, how do you fit yourself as a financial institution in that evolving environment? Well,
the youth thing is critical, and that's why we have developed a creative economy strategy. The youth are there, and that's why we are supporting innovation. Those are the youth. That's why you see the youth. That's why we've created also an SME incubation initiative. All those are to make it easier for the youth to become entrepreneurs and also to widen the opportunity available to the youth.
Okay. The president of the Africa Export-Import Bank, Professor Benedict Okey Oramah, thank you very much indeed for being guest on Globewatch.
Thank you very much, Charles. It was a pleasure to be here.
Okay, you're welcome.